Live from Riverside. It's Chris and Lee. Hey, 1, 2, 3, 4. All right, we're all around live. Everybody come in, have a seat. Come in, have a seat. Come in, have a seat. Let's refresh this bad boy. Come in, have a seat. Come in, have a seat. Come in, have a seat.
Okay,
we are here.
Joining up here.
We're here to talk about loans. We're here to talk about real estate, scenarios, questions, everything that you guys have for us. We want to help you guys. Give us scenarios. I want to talk about some scenarios. I want to see where you guys' challenges are, what you guys are dealing with out there. Whether you're a realtor, whether you're a lender, whether you're a
Well, you just
buyer.
had somebody call you a little bit ago.
I'm going to talk about it. Let everyone come in and have a seat. Think of their own questions.
Well, a lot of people call us because they're in trouble. And if you're smart, you call us before you're in trouble. But people call us all the time because they're in trouble. You're right. We look like we've been freaking tanning, huh?
We've been hanging out in Maui.
I guess, Maui. But people call us when they're in trouble. And they're like, hey, what can I do? And it's really difficult because the right thing to do is set it up so you didn't fall apart before you got there. And we have that like a lot. And we have actually saved a lot of people. Actually, a lot of people on this feed that actually jump on here often. We had one who was in escrow, and she's like, this is a new build, and it's not what I wanted. It's not going the way I wanted. I don't think they're giving me the right deal. I don't think I'm being represented. I said, cool, who's your realtor? She said, well, I thought it would be beneficial to use the builder as the realtor. I was like, no. Okay, cool, who's your lender? Oh, the realtor, which is the builder, gave me their lender. And I'm like, oh, shit, that's horrible. Okay, so here's the big question. This is the big question. How much EMD did you put down? Because that's what's really at risk, is your earnest money deposit. So she said I think it was maybe a grand. And I said, okay, so I need to give you worst case scenario right now. Worst case scenario, you walk away, you lose $1,000. That's worst case. And if you're okay with that, we can start moving forward. Shit, it's not working.
So here's the I know it'll be fine. So here's the thing. When you're in a bad spot with a transaction, it doesn't mean that that's the end. I mean, we've been in a lot of bumpy rides, but the chassis was stuffed. The wheels are tough. We know this vehicle can run, and it's going to be a bumpy ride, but we're going to get it to the finish line. The problem is a lot of lenders and realtors out there try to go for these bumpy rides, but don't have a strong foundation, don't have a strong chassis, don't have a set of wheels on this vehicle, and it does go off the rails. It does go off the road. It does go sideways, and a lot of people lose, like he said, the deposit, because that's what's really at risk. Here's the other thing. Your lender and your realtor need to be in communication.
Well, we had one just like
good
last week where there was
because if there's not good communication, what's going to happen is the thing is going to, like the scenario I had this morning, the contingencies are going to get signed off and this person's deposit's at risk. Because of that, that's where the money's getting lost. What were you saying?
We had one that was, the equity was at risk for like $200,000, $200,000. If this didn't close, if this didn't close, the client would lose $200,000. No kidding. It's a very unique situation. Very unique. $200,000. Pull up the rates. So there's a lot going on, and we want to help you get the house in 2024. There's ways to do it. Wherever you're at, chime in. Tell us where you're at. Are you watching the solar eclipse? It's happening like right now for the next hour or two or whatever. What are you trying to do in 2024? Do you want to buy a house? If so, what do you want to do? What type of down payment? Do you want to know what the rates are? Rates are 5.625 for a 15-year fixed and a 5.75 for a 30-year fixed. That's what FHA is putting out on the website. You take user 296. Go.
How long till I hear back for a pre-approval? Well, it depends. It depends if all the documents are in, and it depends if your credit is usable. Because what's going to happen is if you have not good credit, if it's just crap credit, what's going to happen is they're going to pull the credit, and they're like, I'm going to give them an update later.
Yeah.
If you have all documents in there, then they're going to move forward if your credit's good. But if not all the documents are in there, they're like, I got to get to that later because there's other files that are being worked on where the credit is functional and the documents are in. So if everything is lined up like that, 24 to 48 hours. Sometimes sooner.
Talk with somebody. It's not all it's not all electronic. I've had people say, "Hey, I filled out the entire app and I haven't heard anything."
Not true.
Did we talk? Have we talked to you? If we talk to you, then you know where the problem is, because they're like, "Hey, I uploaded my taxes." I'm like, "I didn't get any W-2s."
It's in my taxes.
It's in my taxes. No, it's not. Sometimes it is. Sometimes it isn't. But sometimes people don't know the difference between a W-2 and a 1040, and they just think it's in this big category of taxes. And if they didn't upload everything, then we can't do anything.
Marco B, how you doing, man? What would a payment be at $350,000 house? What income is required? So you want to know how much the payment is for $350,000. You want to know what you need to make a month.
Well, a lot of it's going to boil down to your tax base, but you're going to be somewhere in the neighborhood of $2,800 to $3,300. That was somewhere in that range, $2,800 to $3,300. Tax base is a big deal, and so is homeowners insurance.
And I would say, what, $60,000 to $80,000 a year? Somewhere in that range. So there you go, Marcos B. Hope that helped. D. Ron Harvey. I'm in Metro Atlanta trying to get a house as soon as possible. So what does Ron got to do, Lee?
You got to call. If you need a badass loan, call a badass loan officer. Your badass loan officers are Chris and Lee. You can reach them at the phone numbers on the screen. You should screenshot this because it's going to disappear in 5, 4, 3, 2, 1, bye.
Boom. All right. Fukabolila. Loans available for 1966 manufactured home. I'm having a hard time. 580 credit score, $30,000 income. Yes, it is a hard time at 1966.
Yes.
Absolutely. The guideline says
happen.
1976, June 1976, and after.
Not going to happen.
So 66, cash money, man.
Not going to happen. Cash money.
Or private loan, maybe private loan.
Yeah, not going to happen.
Okay, Celsa, if you guys want to buy a house, call these guys. They are good. Trust me, I just closed last week.
I appreciate you, Celso. Yes, we are. A lot of deals come to us with some hiccups. We solve the hiccups. We fund it. If it can be done, we can do it.
Yeah.
We can do it. I tell people, listen, I'm really good. Really good. Not 100%. Nobody's 100%. But I'll tell you what, if you are in a tight spot, we are the ones you want in your corner.
Yeah.
Absolutely no question about it.
I'll tell you what, this dude right here, Celso, is a shrewd investor too. This guy, badass house in a badass city with equity built in. So that's pretty cool. D-Ron Harvey again. Should I keep shopping for lenders for a better pre-approval?
D-Ron, the guidelines are the guidelines. So here's what it is, okay? You choose your lender, but the lenders, the loan officers, really actually is the loan officer. It's not the lender, because you think that I work for NAF. If you're a producing loan officer, NAF works for you. That's the reality of it. Is that if you are a producing loan officer, it means you bring your own business, you understand things, you don't have to have everybody tell you what to do. You're a producing loan officer. Every bank wants you. Wells Fargo wants you. Bank of America wants you. Everybody wants you. The brokers want you. We get recruiting calls all the time. So the reason for that is because the LO knows what they're doing. So if you chose a good LO and he's really a good LO, guidelines are the guidelines. Now, the bank does have a little bit to do with it, a little bit, because some banks are direct. Like New American Funding is direct. Some of your smaller banks have multiple overlays. I'll give you a common one I run into, VA loan needing a 620 FICO. If the bank says you need 620 FICO, that's because they have an overlay, and in their bank, that's true. But the VA guidelines do not have a FICO requirement. You can have a 520 FICO. As long as I hit the residual and I get a DUAE, I can move forward on a VA loan. So choose your loan officer, choose them well, and then make sure your LO knows what the heck's going on. You're not going to change your ratios. Maybe a good LO can calculate more income. That happens sometimes. Like, for instance, if you gave me VA disability and an inexperienced LO doesn't know you can gross that up 25%, well, then it costs you in buying power, because I can actually give you more income because VA disability is tax-free. So there's these little things that'll help. But once your income is dialed, and no matter what LO you go to, that's it. That's what it's going to be. That's it. Then it's just back-end ratio. 56.99 on an FHA, 50 on a good day for a conventional Fannie Mae Freddie Mac. VA, no real back-end ratio. I funded them at 86. Crazy. Anyway.
What? A lot of questions, guys. We're going to get to every single one of you, so just hang in there. I want to piggyback on something that he said, okay, guys? So here's a big deal. You need to make sure that the lender and the realtor are in good communication. I'm going to give you a scenario that just happened this morning. I got a phone call from a frantic viewer of ours, and he said, hey, I need your help. I need your help. What I was doing is I was doing a HELOC to fund my primary loan, and the HELOC denied me, which means the primary loan doesn't work. Oh, and worse, this is the worst part of it.
I haven't heard about this one yet.
The realtor released all contingencies. What that means is the deposit, whether it's $1,000 or $200,000 in there that you put in there to say I'm serious about buying this house, is probably gone. I'm not going to say guaranteed, but I'm going to say probably gone.
Yeah.
Because all contingencies are released. Lee, can you explain what contingencies are?
So contingencies, so when you go into a contract, you have a buyer that wants to buy, a seller that wants to sell. Very simple. Now, you go a little deeper than that, you have the buyer's agent, the seller's agent that actually understand the contract.
Two separate agents, guys.
Okay, two separate agents. Don't make it the same agent. Not a good idea. So anyway, you got both of these people here, and the buyer says, hey, listen, I don't know everything about your property. The seller says, well, tell you what, I'll give you 17 days to do any inspection you want to. You want to walk in and inspect the walls, the paint, the floor, the ground, whatever you want to inspect, 17 days. Then, in California, there's another one called the loan contingency. And the seller says, hey, listen, tell you what, I know you have a pre-approval, but that's not absolute. So let's make sure that your lender can absolutely fund this within 21 days. So now there's some inspections that release at 17 days, like what's a good one? Termite's a good one. Home inspection, roof inspection. 21 days is loan approval. 21 days. So by the CAR contract, California Association of Realtors, the lender can say, no, this does not qualify. This loan doesn't qualify. I know I said it was pre-qualified, but when I sent it through underwriting, I didn't know that he had child support. There's some things that didn't show up on the pre-qual that when we went into underwriting, we found them. Oh my God, you owe the IRS a lot of money. This loan no longer qualifies. So as long as I didn't release that contingency, I can get out of the contract because something wasn't there. In the first 17 days, you can go, I don't like the color. I don't like green. And I thought it was green, but it's not. I don't like green. I don't like green. So canceled. For 17 days, for most things, you can just cancel just because. But the minute you said, I agree that these are all released, you can no longer cancel because it's green. Then the last one you have is loan contingency. And then if the loan is going to go through, any decent lender can do it, you're buying that house. And they can force you to. It's weird. But if you have the wrong team, it costs you a lot of money.
So I'll give you a scenario. Let's say that we went into underwriting. You found the house you love, you're in contract, and then within 7 days we find out that you have an IRS lien, a sizable IRS lien. Let's call it $20,000, $20,000. What'll happen is we'll all know on this side, and I'll let the agent know, I'll let the borrower know, and then let's just say that we hit the contingency periods, whatever that date is. We hit the contingency periods. The agent will ask me, Chris, is this loan going to close? And I have to be honest and say, I don't know if they can come up with the $20,000. They requested $20,000 from their 401k that they are able to pay this with, but I don't know if we're going to get it on time. I'm going to recommend that we just pause for a second. And they say, Chris, can I release contingencies? Now, that's out of my scope. That's not my scope. But I will say that if it were me, I need to be very cautious because I don't know if that money's coming in. And that's communication, guys. Yeah. That is absolute communication. Now, that agent has the ability to do whatever they want because that's their power, that's their scope. They can release contingencies. They can fight the other listing agent, which a good agent will do. They'll push them back and they'll say, not yet. And, whatever their story is, that's not my side of the fence, so I don't know exactly what they say. But on my side, I'm like, hey, this is the facts. This is just where it sits. And here's the problem. When you request money from the 401k, it might take 48 hours. It may take 4 weeks, depending on the institution. So I have to be cautious and say, I don't know when those funds are coming in. If those funds come in this time period, this window of time, then yes, it'll close. But if it doesn't, I don't know what the sellers are going to do. I don't know if the sellers want to cancel. I don't know if the sellers want to go with another offer that they may have. By the way, everybody has a million other people that want to buy this house, cash, over asking price, blah, blah, blah. They're always bluffing. That being said, the communication's a big deal because if that happens, then the realtor has the knowledge, and if the realtor decides to release contingencies, you know what your problem is. Yeah. If they decide to hold back and say, no, my client's not ready, then you know who the power person is, and that's your buyer's agent.
So should we ask for seller's assistance to lower our monthly payment? Even if they gave you max concession is how much can they contribute. It's not going to lower your monthly payment very much. All that you can do is reduce the purchase price or buy down the rate. And buying down the rate, not always the best move for money. It's usually reduce the purchase price because we're in a high interest rate environment and things are probably going down.
Yeah. Franzi M595, do we pull equity from our investment property now or wait till after we apply for a mortgage? Great question, because that's the problem that just happened. I would say pull the equity now.
Cash in hand.
Pull the equity. Yes, yes, because your loan is no good without the funds to close, without the down payment.
If the bank sniffs that something is going on over here and something is going on over here, and if something doesn't work perfectly, the bank's going to go, nope, don't want any part of this. Don't want any part of this. And there's ways that you don't have an idea that they'll find out.
Yep.
I mean, just ways. Like, for instance, whenever I pull somebody's credit, and I'm like, hey, am I your first loan officer to pull your credit? They say, yeah. Cool. So I pull the credit, and then all of a sudden I see, hey, did Wells Fargo just pull it last week and Chase before that, and then maybe Freedom right before that? Yeah, but you're the first one I told to pull it. And I'm like, listen, we know. Anytime you do something, we know. Everybody knows. It's not, you can't really hide in this world. If you apply for Kohl's, we know. Everybody knows. The credit card agencies know immediately. If you, and here's a big one, people are like, hey, I'm just going to get the FHA and then I'm going to move in and then that's my house. And then they rent it out to somebody else. Can't do that. Don't do that. Don't. But how are they going to find out? How are they going to find out?
They're smarter than you.
How are they going to find out? Well, did you change your bank statement? Oh, wait a minute. Did you just change the mailing address from the address you bought to a different address? Boom, you just triggered something. What? Because it's the U.S. Post Office. How dare you? U.S. Post Office, federal government. Guess what? Their data records talk to the IRS. The IRS talks to FHA, Fannie Mae, Freddie Mac, VA. All these people talk to each other. Don't do it. Just don't. Just do it right. Have the right people and we'll help you.
Realize who you're working with, guys. These people are lending you hundreds of thousands of dollars and thousands of other the same. Yeah. So these guys have the money for the investigators, for the FBI, for whatever they want access to. So you cannot think them, guys. D-Ron Harvey, he's going to be calling soon, man.
I appreciate you, D-Ron. We appreciate you.
Jonathan Padilla, what do you guys need to buy in Texas? I'm in Cali. Jonathan, what do you big move, man.
Texas. We love Texas. I have a house in Texas. Right off of Lake Travis, outside of Austin, Texas. Love doing loans in Texas. Love Texas. We do loans in all 50 states, by the way. We're here to help you.
All right. User 2764, 630 husbands, 630 score, I guess. Husbands and me. Credit. 70K with husband. They only approved for 150,000. Sounds like you have a lot of debt.
Yeah, it's going to boil down to debt. They should have given you a plan on how to increase that. You should have an idea of what you want to buy, what's your realistic purchase price, and then how do I get there? Some people, well, there's some things that you may not know and an inexperienced loan officer might not know. Like, for instance, if you came to me and you said, hey, listen, I have all these debts, and I'm like, this $700 a month. You're like, yeah, that's my truck. I'm like, cool. It's going to be paid off in 10 months, right? According to the credit report. Yeah, it's going to be paid off in 10 months. I was thinking about turning it in, buying a new one. Don't do that. Why? Because 10 months left, I can ignore it. But I have to know that in the back of my brain. It doesn't just show up on a guideline. You have to know that I can ignore a 10-month installment program and I can add that $700, which will give you more buying power. There's certain things I can ignore. There's certain things I cannot.
Also, at a 630, depending on the size of your bank, they might say, hey, anything under a 640, the ratios can only go to here. Yeah. That's called an overlay, guys. We don't have overlays, which means we can max it. We can go push it as far as the system will take it. That being said, 630 might have an overlay depending on the size of the bank. I recommend a second opinion. A $70,000 income should be in the range of about $300,000. So, Tisha012, is a HELOC assumable?
Well, probably not. And I'll give you the basics behind it. Sometimes. I'll give sometimes, but probably not. Here's why. Because a HELOC is a home equity line of credit. Okay? Home equity line of credit, which implies it's leveraged by your home. So whoever owns that home, that has to be their loan. See the logic in that?
Yeah, Francie's back. The investment property is rented out. The equity will be paid via the rent collected. So you're looking maybe a DSCR, man, depending if you have the down payment or not.
DSCR seems best at the moment.
Tasha says, "What's up, guys?"
What's up, Tasha? Great to see you. DIA followed us. Husband mine's 630, 70. That's we already did that. 750. Cool.
We haven't done that. 1,700 approval is 150. Was that the one we just did?
Yeah.
Oh, okay.
Yeah.
I got a good job in California, thinking of buying a first house in Texas. Another person wanted to buy in Texas.
I know there's a lot of people buying in Texas. There's some really good things. Here's some things that you should think about in California versus Texas. California, we have something called Proposition 13, which doesn't allow the tax base to get really high. As a matter of fact, whenever I qualify somebody in California, I put in 1.25 as a tax base, and it's usually close except on new builds. So 1.25 on the tax base. If you go to Texas, it doesn't have the same situation. I closed one in Buda, Texas about 2 weeks ago. 3.7 tax base. What does that mean? On a 1.2 tax base on a probably $500,000 house, $300 a month. Same $500,000 house, 3.7, over $1,000 a month monthly payment, which reduces your buying power.
Hey guys, do me a favor. Give me some likes. Give me some shares. Give me all that stuff. I'm trying to get more people in here so they can ask more questions, and more questions get asked. It helps all of us, okay? The same person said, my plan is to find a job in Texas after we buy the house. Is that a problem with banks?
If we tell them that's your plan and we can make it make sense. Thank you for all what is it? That's the three fingers. I like the three fingers. I don't know what that is, but that's like Mockingjay shit.
I don't know that,
That's pretty cool, man. Anyway, my plan is to find a Texas. Yes, that can happen. It can happen. But you have to have a good plan. It can't be, hey, I'm just going to see how it goes. I'm just going to buy this now and see how it goes. The bank's going to be like, yeah, probably not. Probably not. Yeah. You can risk yourself, but you can't risk our money. Yeah, it's probably not. So there are scenarios where it does work, where you're highly employable. Like, for instance, there's some tech people in San Francisco who can get a job tech in Austin, or just do a straight transfer from San Francisco to Austin, Sacramento, Austin. And they like that, and we just get something from their employer stating, yes, they can transfer at any time. Boom, house in Austin. Easy.
Yeah. Rich Explorers, can I port my loan for a 1031? Port. What'd that mean?
Port. 1031 exchange is
you're going to be moving the equity.
Tax. Yeah, it's a tax situation where you're trying to do an exchange for tax basis from one to another. I think port is a technical term that we don't get involved in.
Rich Explorers, Can you elaborate?
Yeah.
We'll help you. Francie, M595. DSCR, even when we're going to live in the home, we want to purchase. So this is new, guys. We're not very familiar with it. Just being honest, I've never done one. Okay.
A primary DSCR?
Primary DSCR. Is it possible? Yes.
So you rent it to yourself?
I'm not sure, man. I'll look into the guidelines.
That's
Francie, call us. Yeah. I'll dig into the guidelines. We'll get you some data on that.
We just got a notification last week that you can do a primary residence DSCR. And I'm like, how do you do a whatever?
That brain hurts.
Yeah.
Dennis the Tech Guy. This is like a TV show. I tune in every day.
I appreciate you, Dennis the Tech Guy. We
love
appreciate you very much, man.
Speaking about buying in Florida, and that's where it is.
Yeah. Speaking about buying in Florida. We love Florida. You know why Florida's going to be one of my favorite states for a while? Because Governor DeSantis just signed. He just signed in a anti-squatters law, because squatters are a problem across the country, especially in California. It's ridiculous. Yep. It's insane. But nobody likes them. Nobody likes squatters. And I feel bad for them. But why take somebody's property and then the law's on your side? Screw that shit. Sorry. Don't do that. How about that?
Yeah, well, you're hurting the investor. The investors aren't these big money bag guys. The investors are people like us.
Yes,
normal people.
I could have a squatter in my house. It scares the shit out of me. I mean, I have an Airbnb, and sometimes when somebody's a late checkout, I'm like, oh, God, please don't be a squatter. In the back of my brain, it's always, because I know sheriff, court, law, oh, my God.
Yeah, you're going to put the person in a bad spot. Tisha012, it's my home now due to probate. Don't know if I can get a different loan to pay off the HELOC. That's the problem.
Got it. If it's your loan now, your home now due to probate. So, Tisha, it may be that you do have to do a full cash out refi. We're going to have to show the transfer of title. We're going to have to show the ownership, and you have to qualify. It's not automatic. You do have to have the income. The assets are probably the house, so you don't need that. But your income is a big one, and your credit score is another big one. So as long as your income and your credit score are there, it might be doable. And I will tell you, if we did it now in order to cover the HELOC, you're in a higher interest rate environment, I would immediately start planning a strategic refinance. Strategic refinance. Put that in your brain. Strategic refinance. Why? Because the Fed, right now, this is where we're at. High. This is where we're going. Low. This is 26, 27. 2026, 2027. So where we're at right now, 5.25. These are all 12 Fed board members that are saying we should be at 5.25, 5.5. Over the next 2 years, they all are in consensus that we should be at 2.5. 2.5. Now, if you follow the basics at 150 basis points off of the prime rate, you should be in the fours, maybe. Fours. Well, we're financing right now in the sixes. So that's a big difference. We're talking strategic refinance in the future.
And Tisha, get a move on that fast, because once the taxes are due and all that stuff starts hitting, they're going to come. They're going to rain on you.
It can be in trouble fast.
Yeah. Most people, I'm being honest, most people that get a home through probate can't finance it. It usually gets sold. We want to help you. Call us as soon as possible. User 4744. Any incentives for buying a first time in Texas?
Well, there's down payment assistance programs. They do exist. However, here's one thing that I need you to know. None of the down payment assistance programs are just dynamite, amazing, great. None of them. Not a one, none of them, none of them. They all have some type of catch. There's like, some of them are a silent second. Some of them are a higher interest rate. Some of them have catches. They all throttle back your buying power. None of them let you redline it. So there's catches to all of them. However, if necessary, we are more than happy to put a down payment assistance program in order to help you get that house.
Heck yeah. Rich Explorers. Porting a loan is where you own loan can be transferred to your new property so you can keep the rate. Okay.
Sounds like you're a loan officer.
Yeah.
All right,
That's
good.
Interesting.
Yeah.
Danny Cruz Santos. If you have a co-borrower with credit score, do they use?
If you have a core borrower, which credit score? Okay, cool. Good question. Very good question. So what we do is we take the primary borrower's credit score. Okay? We take the high, we take the low, and we get rid of them. And then after we get rid of them, we have the operating FICO score for the primary borrower. Then we take the co-borrower. We take the high, we take the low, get rid of them, and we keep the mid. Now we have the operating FICO score for the co-borrower. Whichever is lower, that's the operating FICO score for the file. Now, there is a guideline change recently. If you're legally married, we may be able to blend credit. That's where we take this FICO, mash them all up together, and then divide by 2 and go with that blended FICO. But that's a new guideline change.
Guys, you TikTok users, I need your help still. We're at 500 likes. I want to get us to 5,000.
Like us up. We appreciate you guys very much.
We got to 4,000 last week.
We're trying to give you facts.
Yeah.
Facts. The data.
You elite kickbacks.
How you do this. We appreciate that.
Maddie Boo, my third favorite Maddie. How do you guys feel about credit unions and home loans? I'm going to give you 2 answers. So you go first, I'll go second.
Okay, cool. So credit unions sometimes are amazing. Sometimes I can't beat them. The truth is, sometimes I can't beat them. I'll actually go head to head with them. But here's what credit unions are. Credit unions are all of the members own the bank. And because all of the members own the bank, they get to run their own show and create their own rules. Now, if they want to reach out to Fannie Mae and Freddie Mac and then say, hey, we will apply to follow your rules, well, then they can do Fannie Mae and Freddie Mac, but some of them don't. A lot of them don't. They're like, hey, guys, no, this is for the local ABC community, and because of that, F Fannie Mae, F Freddie Mac, FVA, FHA, we don't want none of y'all.
Yep.
But for y'all local people, we'll help you. Now, I've actually got some credit union where I'm going, that's an amazing deal, man. And I gone all across my management, all my managers, all loan officers. I'm like, I can't beat this deal. Sometimes that happens. Rarely. But here's the other side. Here's the downside of credit unions. They don't have the programs because they chose not to play the game. If they choose not to play the game of VA, they don't have VA. if they choose not to play the game of FHA and CalHFA rides on an FHA, well, then you don't have the FHA and the CalHFA. So there's pros and cons to credit unions. Not all bad, not all good, just like anything in life. There's some good, there's some bad.
I'll give you my piece, okay?
Cool.
So we're good. We're already in a competitive market, and it's going to get even more competitive, okay? Listing agents, when you put in an offer, they're like, big bank, credit union, big bank, mortgage company. They would rather deal with mortgage companies because our only scope is mortgages. We don't deal with CDs and checking and savings and bonds and all those other things like banks do. With big banks and credit unions, their primary focus is not home loans. And we have to hit certain dates for contingencies, a release of this, release of that, close by this day. And we're designed to do that. So when a listing agent looks at the offer, the bank information is on there. And if it's a mortgage company or a national mortgage company like New American Funding is, your chances of getting your offer accepted are much higher than dealing with a credit union or a bank. So there's two.
And by the way, if you want to have some fun, ask the realtors if they'd rather work with a independent bank like us or Wells Fargo or Bank of America. They all go, screw Wells Fargo, screw Bank of America. I don't want to work with them. I don't care how good the loan officer is. The bank is not fighting for business. They don't care. Nope. They got people walking in all day long. They'll take as long as they take, and that's what it is.
We're scrapping daily.
Yeah, we're scrapping, man. We're scrappers.
TikTok user, if someone qualifies for a home, then transfer it to someone's name. Will the new person gain credit on their credit report?
Oh, hell no. You got a problem, TikTok user. I'm glad you're just TikTok user because nobody wants to follow you and say, whoa, guess what? There's something called a due on sale clause inside of a loan.
What's that mean?
What does that mean? That means that if Chris took out a loan and Chris used all of his numbers, his income, his assets, his FICO score, everything, that's Chris's loan. And the bank says, hey, you know what, Chris? We that's your loan.
We do
business. Agree. Yeah, well, that's good. If Chris said, hey, I'm going to transfer it over to Lee, the bank's going to go, whoa. Back off, guys. Back off. You can't just transfer it to me. That's ridiculous. I didn't approve Lee. Lee didn't go through my underwriting guidelines. I didn't pull Lee's credit. I didn't say Lee could have this loan. I never said that. In fact, I said in my legal contracts, if Chris ever transferred it out of his name, I want all my money today. No negotiation. Due on sale clause right now.
All right, guys, get ready to screenshot. Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. You better screenshot this because it's not going to last. Like a fire sale, it's disappearing now.
And if you guys are ready to just apply, go to the link in the bio and click on apply for a home loan now. Francie M595, I'm going to text you guys because I need more info on which direction to go.
We're here for you, Francie. There's a lot of people like on this feed who started this exact same way. They started out going, I think these guys might know something. And then they're like, hey, I'm in trouble. Unfortunately, most people that reach out to us are in some kind of trouble.
Facts.
They're like, hey, I'm in trouble somehow. Okay, cool. Tell me what that trouble is. And they're like, hey, can you get me out of it? I can't always get you out of it. I can't. But I can give you a good assessment. I'll say, hey, listen, there's a 50-50 shot I can win this. And like, that's better than what they're telling me. I'll take it.
I like those odds. Peachy, hi. What is needed to buy a home when self-employed?
Peachy. Here's what it is. 2 years. Income. That's it. 2 years. But here's the catch. When, Peachy, you start being self-employed and you're like, hey, guess what? I'm self-employed. I make $200,000 a year. And then the IRS man comes around and he's like, hey, heard you made $200,000 a year. And you say, I didn't make $200,000 a year because I had to pay for marketing and expenses. And then there's the car. And then there's my Starbucks budget for my clients. And I only made 30 grand. IRS man says, all right, I guess. Pay taxes on 30 grand. Cool. Even though you made 200, it's perfectly legal what you just did. Cool, you make 30 grand. Cool. Thank you. Mr. IRS guy grabs his hat, drives off.
And you're like, I win.
And you're like, I win. Yes. I didn't have to pay no taxes. Screw the damn government. We don't give a shit. Cool. Then you go to the bank and the bank says, hey, how much money did you make? And you said, trust me, bro, I made $200. And they're like, okay, cool.
200,000.
200,000. And you're like, trust me, I make 200,000. I'm like, cool. Show me your tax returns. All right. I know. Don't worry about what I told the IRS. I made 200 grand. I know what it says on those documents, but don't worry about it.
You want to see it?
I want to see. I want to see it. We have to see it. We have to see it. Well, here's the catch. The IRS is the federal government. When you go to the bank is not using their own money. They are using an investor called FHA, which is the federal government. They are using an investor called VA, or actually they're insured, VA, which is the federal government. They're using USDA, which is the federal government, and they're using Fannie Mae and Freddie Mac, which are GSE, government-sponsored entity, which means the government stepped in and went to a point, bailed them out, but they have to report to the government. So when you tell Mr. IRS guy with a hat and he drives off, you only made 30 grand, you can't turn around and tell FHA, VA, USDA, Fannie Mae, and Freddie Mac you made more money. That's the real problem with people that are self-employed.
Boom. Brianna Monroe. Monet. I don't know.
Monet.
Do you do loans? Do you do manufactured homes?
Yes, all day, every day, as long as they are fixed to a permanent foundation via a 433 and an engineering cert, and you own the land. Don't try and come to me with rent. If you come to me with rent, I'm going to tell you, you don't have real estate. You got a home you could hook up to the back of a truck and take to Florida tomorrow if you wanted. You don't own real estate.
CCG said, why do you guys have a election thing at the bottom of your screen? No one else does. What's that mean?
I don't know what you're talking about.
Why do you guys have a learn about U.S. elections bar at the bottom and no one else does?
No shit. That's new to us. I don't see it. I don't see it. Do you see it? I don't see it.
Yeah, no.
I'm watching us on one of the feeds and I don't see it.
Scroll down a little bit.
I can't. That's it. Yeah.
Yeah.
I can't.
I don't know, man.
I don't see what you're seeing, but I don't know. I don't know.
And then he said, facts, sir, only. The facts, please. I don't know what that means.
I don't know either.
Brianna,
We're here for you.
React to Brianna. What if I want to go on the loan on my own, but I'm married?
No worries. Brianna Monet. I've actually had a woman call me up and she says, hey, Lee, I want to buy a house, but I don't want my husband to know about it. I'm like, okay.
Want to buy it for your boyfriend?
I'm like, are you in the middle of a divorce? Oh, no, we're fine. I just don't want him to know about the house. And I'm like, I won't go any deeper, but I will tell you that we're going to limit the loans. And she goes, I'm okay with that. Can I do it? And I said, if we go Fannie Mae and Freddie Mac and you guys file your taxes independently, I can. There may be a document at the end that, because we're in a community property state, which is California, that he has to sign one doc. And she goes, I can probably get away with one doc. And I said, okay, then I can do the rest. And we did it. I actually got our house. She calls me every now and then. That was like 3 years ago. She calls me every now and then just to go, hey, really, I love the house. Appreciate it. Thank you. I'm like, okay.
My boyfriend loves it.
Yeah.
Brianna, what state are you in?
She doesn't say that.
Let me know what state you're in.
Yeah.
Tasha, that is correct. I have gotten denied by a credit union.
Okay, cool. Tasha, she says we're correct, man. Appreciate it, Tasha. Yeah, we know our stuff. We know our stuff here. We do.
Francie said home builder Lennar is offering a good interest rates. Do I shop around?
Oh, Francie. You say your piece because I'm about to go on a rant and nobody wants to hear my rant. You tell them about builders. Tell them. Don't hold back.
Builders are not your friend. It's kind of like the cops. You know, growing up, everyone was like, hey, trust the cops. They're your friend. No, they are not. Know this. They are capitalists. They are looking for all your money. And not just all your money, but all your money from every side and every angle that they are running. I bet when you walked in, they didn't want you to have your realtor. They didn't want you to have your lender. And I'm about to 1, 2, 3 release Lee on you. Boom, go.
Oh, God. Knock, knock.
You guys need to sit down.
Knock.
Who's there?
No. Dude, I thought you trained well.
Oh, this is the cops.
Is it the cops? You do me.
Knock,
Ready?
knock.
Where's the warrant?
Oh.
Boom. You see that?
Where's
I don't trust nobody.
Got to get that in
I don't
there,
trust
guys.
nobody. Okay, so there's a lot of money in this business. How much money? A lot of money. I'm about to tell you how much money, and it's just some simple math, okay? So let's take a $500,000 house. $500,000 house, okay? Most people know that there's a realtor commission on the front and a realtor commission on the back. It's 3% traditionally, 3%. So 3% of $500,000 is $15,000. There's $15,000 on the front, $15,000 on the back, which is $30,000. If Lennar can get you not to use your own realtor, guess how much they make? $30,000 because they represent both sides, the seller and the buyer. They don't want you to use your realtor. But here's part that they don't want you to know. There's also the same thing in the lending business. In the lending business, there's the front end of the loan and the back end of the loan. The front end of the loan is where Chris and I work, the loan officer in the bank. The back end is called the servicing rights. Servicing rights go for as much as 7%, but let's just take it down to 3% for easy math. 3% on the front end, that pays the loan officer in the bank and all the processors, and 3% on the back, that's what they sell it off for. So there is another $30,000. So, 30? 3, 15, 30, 30. Yeah, dude, I lost my math for a second. Uh-oh. So, there's $30,000 on the real estate side, and there's $30,000 on the lending side. Now, guess how they get to keep all of that? They get to keep all of it if you don't have your own realtor and you don't have your own lender. Why would they not want you to do that? Well, because they want that extra $60,000. Now remember, they're selling you a $500,000 house. They invested their own money, let's call it $400,000, and they're selling it to you. They're going to make a $100,000 profit. But you know how they can make a $160,000 profit? By not letting you have your realtor or your lender. Now, is that legal? Not legal. Not legal. You can have your own realtor. You can have your own loan officer. But if you walk into that new build and you don't know what you're doing, you're going to sign a sheet and it's going to sound nice and innocent. They're going to go, hey, we like to monitor all the people that walk into our open house, so can you please sign your name? If you read the bottom of it, it says, I hereby swear and attest that I am not represented by any real estate agent or realtor.
And you can make all the money on me.
Yes, and you can make all the money on me. And then everybody's going to be clever and go, well, maybe I'll just tell them after. They're like, nope, sorry, you signed the document. If you don't want the house, that's fine. We'll sell it to the next guy who signed the document. They're dirty birdies. They are dirty birdies. So, should you shop? Yes. But if you didn't have your own realtor and your own loan officer to start, you probably don't even know the questions. You don't know where you're getting screwed. You have no idea what to ask. We'll help you as much as we can, but if you're already there, you might be in a bad spot.
Brianna Monet is thinking about going to Lennar too.
Cool. Lennar builds beautiful homes, but they play such dirty birdie games. Dirty birdie. What do you mean by dirty birdie? Tell you what. We got to build sidewalks for this community. We got to build sidewalks. Well, how much is that sidewalks going to cost us? $2 million. Yeah, but then we're going to have to build that into the price of the house. What if we charge the homeowners and we don't tell them? What if we do that? We charge the homeowners,
do that?
And we won't tell them.
How do you do that?
Well, how do you do that? Well, I sell the house for $500,000 because that's the market. But I'm going to build a bond in the back of the tax base to pay for the $2 million sidewalks. And it looks like a $500,000 house, but these guys are paying for the sidewalks, and they don't even know it.
Right. Enjoy the sidewalks.
Does that happen?
All the time. All the time.
Yep.
Luna and Bagheera back in the house. What's the best approach when you don't qualify for a first-time homebuyer assistance? 2-1 buy down, maybe?
Nice question, Luna and Bagheera. But no. Let me show you. Boom! Thumbs down. Did they catch it? No, thumbs down. Here's why. Because even if you do a 2-1 buy down, you don't qualify at the lower rate. When you do the 2-1 buy down, you qualify at the max rate. So if you qualified there, then you qualified. The 2-1 buy down is this real fancy thing where they're saying, hey, I can get you to pay less interest for the first year and 2 years. And it sounds good on the front. It sounds amazing. So does cocaine. Cocaine sounds amazing. It's like, hey, wait a minute. I can do more work. I can be more focused. I can get more done. I need less sleep. This sounds amazing. Oh, I want to try this. I think this is a good thing. But when you dig in a little deeper, you go, wait a minute. You didn't tell me about the rest of this story. And here's the rest of the story. When you say, hey, listen, I'm going to get me a 2-1 buy down today. Get me a 2-1 buy down. So I qualify you at 6.5%. 6.5, you're qualified. 6.5, great. But I'm going to use one of these fancy 2-1 buy downs, and you're going to get 4.5% for the first year, 5.5% for the second year, and then on the third year, you're going to go to 6.5% because that's what a 2-1 buy down is. So it sounds amazing, like cocaine. Sounds awesome. Sounds amazing. Until this starts to happen. Hey, the whole world is going to go from 5.25, which is the Fed funding rate right now, over the next 2 years down to 2.5, according to the Federal Reserve. So when you start with like, hey, I got a 4.5 rate, that's amazing. And you have a contract that next year says you're at 5.5. So while the rest of the world goes from 6.5 to 5.5, you just crossed them. And then next year, by contract, you go to 6.5, and they're at 4.5 forever. And you're at 6.5 forever. For 30 years, anyway. For 30 years. It sounds amazing. But if you actually peel back the layers of the onion and you understand it, I think it's horrible. There's only like very few times where I go with a 2-1 buy down.
Not just that, 2-1 buy down has to come from the seller.
Yeah.
Seller
Yeah.
credit. So if the seller's going to credit you some money, how about you apply that to principal and buy a cheaper house?
Yep.
And if you don't know how, we'll teach you. Juan Santoyo.
He's laughing at us. I don't know if you're laughing with us or at us, but
He's
dude.
watching the eclipse right now.
Oh, dude, watching the eclipse. Don't look straight at it. I hear that you'll turn into an alien.
You will?
Or
I'm out of here, man.
Could be an Orange Man supporter by the end of it.
You
Whatever.
are? I'm out of here, man. Okay, Maverick, business or just personal? Don't know what that means? Please clarify that question, sir. KQ5, can I use a gift of equity buying my grandmother's house while she has a reverse mortgage?
Maybe. Here's
Likely.
why. Likely. Yeah, I will say likely, but not entirely likely. Here's why. Because a reverse mortgage at a certain age, 62 years old, you're allowed. Uh-oh. Oh, I just said age. Oh my God. We just gotta, dude. Okay, I have to be very careful about. I said a age, and I can't say that. And they gave me a red flag.
Can you just say 6'2"?
Yeah, I can just say when they're 6 feet 2 inches tall.
That's confusing as hell.
I know. I forget.
But you
about
guys
it.
get it.
Anyway, reverse mortgage. Yeah, they lend you a certain amount, but you have to have a certain amount in equity. So when somebody goes and they're expensive, this is the part they don't tell you about a reverse mortgage. The loan officers there's no like real wrangled in fees. Because of that, brokers can charge you a ridiculous amount of money, like an inordinate amount of money. There's like as a straight up LO, I can only make X amount of dollars. There's CFPB says I can do that, but reverse mortgage is different. They can charge you ridiculous fees, and you don't know it, and you think you didn't pay it because you didn't take any money out of your pocket. In fact, you got money back, but it costs you in equity. It's huge. So likely you can do it. You're going to need somebody very skilled to pull that off.
Okay, guys, I'm loving this. We started at 500, now we're at 3,300.
Oh, 3,300. Thank you guys very
5,000.
much. We appreciate you. Heart us up. Keep us going on. Keep us on that algorithm.
Give us 5,000 likes, guys. I love it.
Cool.
Thank you very much. KQ5 answered that one. Dennis the Tech Guy. I'm one of those guys. Saw Chris and Lee here, and now working with them. And in fact, they know their stuff.
Appreciate you, Dennis the Tech Guy. We're trying real hard to make sure everything goes good for you.
Reef Sheath. There is any way to get a loan with 1099 gross income, not with net income showing 1040. Matter of fact, there is.
What is it?
Matter of fact, it's non-QM.
Bank statement loan.
Non-QM.
Bank statement, right?
Well, you can go bank statement. You can go 1099 only. There's a
Yeah.
number of. But what's the downside to that, Lee?
Down payment?
Absolutely.
Down
You're
payment?
not going to get 3.5%.
If
You're not going to get the low down payment.
If you're trying for your traditional loans, which is 3.5% down or 5% down, you're going to need to be on the up and up. If you want to do 1099, great. Then you show after what your net income is, and we go off of that. With that, you go FHA, VA, USDA, Fannie Mae, Freddie Mac all day long. But if you want to get clever, hey, I just want to show my bank statements. All right, the bank's like, hey, cool. Yeah, we'll work with you. But we're not about to give you one of those low down payment loans. There's too much risk in it for us. So you need 20%. If you give me 20% and you've got a great FICO score, good to go. I had somebody who says, hey, listen, I'll give you 30%, but I got a 580 FICO. Bank don't want you. The bank don't want you. Why? Because you've shown what you'll do via your FICO score. You've shown how you manage debt. So that's your answer right there.
All right, Keith Davis, I'm going to apologize in advance, and I'm going to hold him back just a little bit.
Right,
but the question is, can I use my job money with someone else's credit to purchase a property?
Oh,
I'm sorry, but here he goes.
Oh, Keith. Oh, Keith. Here
Thick
we
skin,
go.
Keith.
Here we
Thick
go.
skin.
Here we go. I hope you have thick skin. I hope you're like, hey, you know what? I have a shitty credit score, but my friend over there, can I just use his credit score or my income? Sure. Why not? Let's let everybody use his credit score. And come on, Keith. Come on. Come on. Seriously? Like, seriously? You want to use, trust me, bro, I want to use his income, and I'm going to use Elon Musk's income because it's like in the billions.
He's my
And
friend.
yeah, he's my friend. And then I want to use my mom's credit score. Can we do that?
She's my
Oh,
friend
you
too.
know what? I want to use Warren Buffett's assets. Can we do that and get qualified for a
Kim
loan?
Kardashian's
Come on.
assets.
Everybody gets qualified on their own accord. I pull your credit, calculate your income and your liabilities. That's real life, Keith. That's real life.
But we can help you with the credit.
That was
man.
him holding me back, by the
Yeah,
way.
I was holding back. I preempted that.
Yeah.
Anyway, so if you have a challenge with the credit, Keith, just go to the link in our bio, click on Fix My Credit.
Yeah.
We have a path for you. Get
Yeah.
that thing rolling so you can buy a house, bud.
And we appreciate you guys. I keep getting those Mockingjay things. I keep getting the fists.
Dude, we're at
Thank you very much.
4,400.
We appreciate you guys so much.
Peachy, where can I find my FICO score that the lenders use?
You need a licensed loan officer to pull your credit. That's the only way to find it. The only way. You can't just go to some agency or whatever. Everybody's afraid to pull your credit. If you're really afraid for me to pull your credit, you're not ready to buy a house.
No.
And I tell people, hey, I'm not upset with you. If you don't buy a house, that's cool. I can't make you buy a house. Just buy. Good luck to you. Call me when you need me. Yeah, you can watch me if you want. I'll teach you a lot of the guidelines, but it won't make a shit bit of difference unless I pull your credit.
Yeah, Ashley Barb, thank you for the love.
Appreciate you.
Holly Falcon, I like that name.
Dude, you missed Barb Brown.
I said Barb.
Barb Brown, 55 followers. Thank you.
What credit score do you have to have? Our debt to income ratio is only 16%, but our credit is 600.
Holly Falcon.
That sounds like an Avenger.
Holly Falcon. So, FHA 580, Fannie Mae Freddie Mac 620. You can go all the way down to 500 on a FHA if you're willing to bring in 10% or more, but it's going to depend on your credit. A lot of it is VA. I don't care what your credit score is. I don't care. I will still build that loan because I might get an approval even at a 520 FICO.
Yep.
Cool.
And Holly, I like that debt to income ratio. Get that process started fast before the competition kicks in.
Yep.
Fran's back in the house. How you doing, Fran?
What's up, Fran?
What is the 2-1 buy down?
What is the 2-1 buy down? 2-1 buy down it's a clever marketing technique that's, to me, a bunch of bullshit. Here's what it is. They say, hey, listen, you don't like 6.5 interest rates where most people are at today? You don't like it? How about I give you 4.5? You're like, how are you going to do that? Well, we're just going to buy it down. Buy it down to 4.5? Can you buy it down to 4.5? Not like for 30 years. Don't be stupid. But for 1 year, yeah. What happens after that 1 year? Oh, good news. It goes to 5.5. For a whole year? Yeah, 5.5. And then it goes back to 6.5. We have to qualify you at 6.5. But for the first year, you pay 4.5. Second year, we pay 5.5. Third year, 6.5. So, 2 year, 2-1 buy down. 2-1 buy down. Cool. What's that going to cost you? 20 grand. $20,000. Well, you didn't like 6.5. What are you going to do? Tell you what, I'll get the seller to pay for it. In fact, I'll make the guidelines mandate that the seller pays for it. Yeah, it sounds like a cool thing, but if you actually peel it back and you understand finance, in my opinion, 98% of the time it's stupid.
But if you really want to do
If
it,
you really want to do it, I'll help you with stupid. I make
You're
a
the
commission.
boss.
Yeah, I make a commission, so I'll help you with stupid.
Dennis the tech guy. What are the benefits of in-house underwriting?
Okay. So if you are a broker and I package a loan up, I send it off to ABC Bank, and then I have to wait for them to come back. Okay? So I send it off to ABC Bank, and then I have to wait for their turn times. If they say 72-hour turn time, then I have to wait 72 hours till it comes back. Okay, cool. That's that. If I have an in-house underwriter, and the in-house underwriter emails me directly and calls my direct line and says, Lee, how'd you get this income? I'm like, hey, underwriter, I got it by doing this. I grossed up that, and I used the 2-year rolling average for that. Thank you, Lee. Cool. Hey, Lee, I got this question about the marriage. Can we actually prove that there's a divorce? Oh, yeah, I can get you that document. I'm sorry I didn't get into the package, but I'll make sure it gets to you. All right, cool. I pick up the phone and I call the underwriter because they work in my company. So that's the pros. There is a con, though. There's a very big con. If the underwriter says denied, I can't just go, can I get another underwriter? Because you can't. But they're very willing to work with us.
Yeah.
So that's a pro.
And the ability to talk to them like that is huge.
Yeah, it's huge.
Way bigger. Way
It's
bigger.
huge.
Luna Bagheera's laughing, man. She thinks you're funny when you went off on that.
Yeah, which one?
The one where credit income.
Yeah. Okay.
Else.
Cool.
Mortgage Sabina. Can you use gift fund on a bank statement loan?
You say yeah.
Yeah. Heck yeah.
I'm racking my brain for the guidelines,
Rack it, man. Rack it.
Can we use gift funds for a bank statement loan? Bank statement loan?
This is down payment. We're not talking about in monthly income. We're talking about down payment. Down payment and closing costs.
I don't think down payment, but I think closing costs. Either way, it's going to be for closing costs. But I think down payment, there's a limit.
Just trust me and verify it later.
We can just trust. I'll trust him.
Doc. What happened to you, Doc?
I don't know, dude.
The banks are ripping you off. Just sign the note with a restrictive endorsement.
There you go, Doc. Yes, you know what? You tell the banks. You just show them big old bad banks.
Here's what we're going to do, bank.
You know what? This is what I'm going to do. You can also tell the cops you're not going to follow their rules because you didn't buy into them. You're a sovereign citizen. You go ahead and tell them that. You know what? Tell the IRS, I'm not going to pay your income tax because I don't believe I signed up for this bullshit.
There you go. Franzi, fix credit before applying for mortgage or apply first and then go from there?
You go.
Apply first and go from there.
Yeah, here's why, because you don't know what you need to fix. You'll be fixing things you don't think that you think you need to fix, you don't need to. And you won't be working on the most important things because in your brain, the most important, but in the mortgage world, probably a whole different game. Probably a whole different game. We run into it every day.
Oh, Doc, cool. Here we go. As soon as the note is signed, the mortgage is paid off. The loan note is the same as an FRN.
Oh.
Exclamation point.
Doc, we love guys like you, man. I love you guys. I do. I love you guys. You're so great. As soon as the note is paid off, you know what? Stop making your mortgage payment. Me too. Let's all stop making our mortgage payment.
Let's see how that goes.
Let's see how that goes. Yeah, that's great.
Holly Falcon.
Cool.
Can a property that is owned outright be used as a down payment for only construction loans?
A property that is owned outright can be used as a down payment. The property cannot be, but the property can be used as leverage for a loan that you take out a loan on that property and then you get the construction loan. So the way you ask the question, no, but the property can be used as leverage to get the money.
Yeah, Mortgage Sabina, thank you for the love. I'm a loan officer myself. Love watching you guys. Always learning.
Love that. Mortgage Sabina, if you got anything, man, bring it to us. If you have any cool tips, guidelines, anything. Where are you at, by the way? Scenarios.
A lot of loan officers pop in here and they're asking scenarios. They don't know we know they're loan officers, but we look them up. And we love the scenarios. We want to help everybody. It's community, guys. We're building a community.
Cool.
So Mortgage Sabina, what do you got? What are you challenged with? You marketing, getting clients, files that aren't going so hot. Maybe you have perfect borrowers. I wish I had those. What do you got, man? Let's talk about rates.
Okay, so rates right now. The rates are at 5.625 and 5.75. Fed Waller spoke last week, and he kind of freaked the market out. And then Fed Powell came in, and he kind of calmed the markets down. It's so strange. There's so much politics going on. It's so weird. Did we experience the solar eclipse?
Not really.
I think it's happening right now, but it never really got dark here. Yeah, Nana Uka.
Nana's back.
Yeah, appreciate you. Great to see you. So, didn't get too dark here. It got a little bit hazy, like a cloudy day. But, like, so far the computers are still working. So far the cops haven't come in and arrested us. So far everything is going kind of as planned. So, this is kind of good news. Anyway, what else we got? Mortgage rates.
You were talking about rates.
We did 5.625. 5.625. And then 5.75. PA, license in
Ohio, Kentucky, Pennsylvania, getting clients leads, not a lot of progress in realtor partners. VAP, talk about VAP. Tell them about VAP.
Okay, so VAP, Mortgage Sabina. You need to have a VAP, value added proposition, and you need to be able to tell it to people fast. So when you're brand new, you're probably going to get most of your business from realtors when you're brand new. So you need to find, and by the way, all the realtors are going to want to work with you as long as you give them free shit and you pay for their stuff. Don't do it. Don't do it. Don't do it.
Short-lived.
Yeah, don't do it because they'll buy the next LO will come in and buy away and buy away and buy away. So the only way is you have to have a value-added proposition and you have to know your stuff. Now, what is your VAP? What is your VAP? That's unique to you. What are you bringing as value? And maybe the value is, hey, I will work all weekend, all the time. I answer the phone all the time. I will run DU on the weekend. I have my Encompass with me all weekend. You tell, I will work every open house with you. This is a very competitive business. And until you get your footing, the odds are like 80% you're going to fail. It's high. It's very high, especially in this market. So you need a VAP, value added proposition. What do you bring to the table? And then once you get big enough, you can be selective. You can be selective. And like where we're at, if somebody pisses me off even a little bit, I'm like, hey, go find another hello. Bye. Thank you. Have a great day. Have a great day. I had one realtor who was cussing a little bit too much. And I was like, I don't like the vibe you're putting off. I really hope you do well. Swear, I hope you do well. I'm just going to opt not to. Here's a couple of my friends. They probably work with you. So I, literally all the time we get to choose this. But until you get that client base, you need to have a VAP, and your realtor needs to know that you are this good. By the way, if you're brand new, please have a good mentor, a good manager, someone you can turn to, because one messed up deal for a realtor, they will never use you again. They will never use you again. You need to close like 10 before you can mess up one with that realtor, with that one realtor. Because the realtor's like, hey, I'm about to put my $15,000 commission on your knowledge. Let's do this. And they will, because they don't know the loan. And then at the end, you find out, hey, I calculated the income incorrectly. Shit, I'm so sorry. Don't worry, we'll get them on the next one. You're never getting another one. Never, never, never. And I wouldn't either if I were a realtor. This is what I tell people. I'm like, hey, you want somebody to answer your phone? This is how I beat a brand new guy like you. Sorry to say this, but this is what I tell people. Hey, everybody was brand new. Yeah, she worked 7 days a week. Cool. Yeah. When I was brand new and I didn't know shit, I worked 7 days a week too. I don't anymore because I don't have to. Because I know my shit. I have a big team, and if you use me, you will get that house. There's no question. You will get that house. You can go chance it with them. They'll answer all weekend, all night. They'll be your therapist. That's how I go up against someone like you. But that's your VAP. Don't be afraid of it. And your answer to that would be, oh, cool. If I don't know anything, I got a manager who's been in this doing this for 25 years, and he's got a team. I promise you I can fund that loan, and I'll answer your call on the weekend. So there's lots of things that we can do to help you guys. We'll talk with you more and more and more. Tune in as much as you want. Morgan Sabina, we're here to help you guys. But in the meantime, we've been Chris and Lee. We're out.